Emotions are a natural part of trading and can impact your decision-making. For instance, have you ever experienced fear or greed when trading? New traders often make the mistake of holding on to losing trades, hoping for a turnaround, and exiting winning trades too soon out of fear of losing their profits if the market reverses. Examining these issues closely, you would discover that they occur because these traders don't have an edge in the market. Thus, regardless of the kind of security you are trading, you must have sound trading strategies. To succeed in the highly competitive financial markets, you need to adopt thoroughly tested and proven trading strategies. Adopting a trading style based on haphazard cross-trading, where you enter positions on various assets without following a systemic approach, is a recipe for failure. Therefore, it's recommended to have a well-defined trading system in place. John Paulson is a billionaire hedge fund manager who uses technical analysis religiously. He rose to fame in 2007 in light of the financial crisis. In 2007 alone, after several bets and shorts against the housing market, his hedge firm, Paulson & Company, made $15 billion in profit. Paulson's profit that year was estimated at $3.4 billion. During the financial crisis, Paulson's bearish view of the credit market went beyond housing and expanded from consumer to corporate debt. Then in 2008, he bet against large financial institutions in the US and the UK, causing many to fail. As expected, harsh criticism followed his actions. And after 2008, his outlook became more bullish. One of the keys to Paulson's success is his ability to conduct extensive research and analysis to identify undervalued assets and market inefficiencies. After identifying these, he focuses on finding the right strategy for that asset and using the rules or information to make investment decisions. By following a set of rules outlined by a trading strategy, you will remove destructive emotions from your trading and eventually have a winning edge in the market. It becomes more easier to open, manage, and stick to profitable trade when you have and understand clear set of rules that define how to manage your profits. Also, closing a losing and non-performing trade will become a normal trading decision if you have a successful strategy. Momentum trading. In Chapter 4, I explained briefly what momentum trading is. This section will dive a little deeper. Again, the saying, "the trend is your friend," comes into play here. Momentum traders and investors aim to benefit from either upward or downward trends in a security's price. Momentum trading involves making money by trading stocks based on current trends. For instance, when a stock's price skyrockets after releasing an impressive earnings report, momentum traders buy shares hoping to increase the stock's price. Alternatively, if a stock's price surges due to rumors of a short squeeze, momentum traders might purchase shares in anticipation of the sharp reduction, thereby pushing the price further. Traders who use this technique seek to profit from trends that persist in the market, assuming that stocks that have been performing well will likely continue doing so soon. Despite some individuals' aversion to investing in markets reaching new highs, there is significant evidence to suggest that markets that hit new highs tend to keep making higher highs. When looking at price momentum, traders examine securities rising continuously for days, weeks, or even months. One way to locate momentum stocks is to use a stock screener to filter all of the stocks trading within, for example, 10% of their 52-week highs. Alternatively, traders may prefer to examine the percentage price change over the previous 12 or 24 weeks. Generally, the former approach is more sensitive to recent price movements. Since mid-2008, the oil and energy sector served as an example of how it was continuously ranked as one of the top performers based on its 12-week or 24-week price performance, despite collapsing.
To keep listening to this audiobook, I've left you a link in the description so you can do it, at no cost thanks to Audible's 30-day free trial.